Shriram Multi-Sector Rotation Fund. Will investing in a thematic fund like this help you build wealth in the long run? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So now before analyzing this fund, let us first understand a few basic details about it. So as an NFO, it opens on 18 November 2024 and closes on 2nd December 2024. And some of its key features are, it is an open-ended fund type which belongs to the category of equity, which is thematic fund, and it has Nifty 500 TRI as its benchmark index, and there is an exit load of 1% if you choose to redeem it within 3 months. But there is no entry load in this fund, and the minimum investment amount you need to start investing in this fund is just 500 rupees, and the fund managers for this fund are Mr. Deepak Ramaraju and Ms. Kargi Bhattacharya Banerjee. So according to the riskometer, the risk involved in this fund is very high. Now, if you take a look at the investment objective of this fund, the primary investment objective is to seek to generate long-term capital appreciation by employing a quantamental approach of investing in equity and equity derivative of specific sectors that are trending due to better earning expectations. So, the allocation among sectors and the stock selection will be decided by the in-house proprietary quantitative model and further augmented with the fundamental analysis. So they seek to generate long-term capital appreciation by employing this method of investing. This is their primary investment objective of the fund. Now let's see whether investing in this will be suitable to us or not, because now we have a basic understanding of this fund. So now let us analyze the pros and cons of investing in this fund. So there are 4 key advantages to investing in this fund. Number 1, active sector rotation strategy, which is the main feature of this fund, the sector rotation strategy. So the fund manager actively moves investment across sectors based on market trends and opportunities, aiming to maximize returns in each phase of the economic cycle. Number 2, diversified across sectors. So unlike sector-specific fund, this fund diversifies its investments across multiple sectors, reducing the sector-specific risk. So this allows for exposure to a wide range of industries, helping to balance risk while tapping into the best performing sectors. Number 3, potential for higher returns. So with its flexible strategy, the fund can shift toward high growth sectors at the right time, potentially generating higher returns compared to funds that are tied to a single sector. Number 4, adaptability to market conditions. So the fund's ability to move across sectors allows it to adapt to changing market conditions. So when one sector is underperforming, the fund can rotate into another sector that shows more potential, making it more agile in volatile market. Now, as we have taken a look at the advantages, now let's move on to the cons, which are the disadvantages to investing in this fund. So there are also other key 4 disadvantages to this fund. So the number 1, higher risk due to active management. So the active sector rotation strategy introduces higher risk. So which means the success of this fund largely depends on the fund's manager's ability to correctly time the rotation between sectors. So poor timing could negatively impact returns. Number 2, expense ratio could be higher. So active management often comes with a higher expense ratio, which means the cost of frequent trading and sector shifting may eat into your returns, making it less appealing to cost-conscious investors. Number 3, volatility from sector concentration. So even though it rotates between sectors, the fund may still have sector concentration risk if a significant portion of assets is invested in a single sector at any given time, which could increase volatility. Number 4, not ideal for passive investor. So if you prefer a passive investment approach and are looking for long-term stability, this fund's active strategy and the potential for rapid changes in sector exposure might not align with your investment style. So these are all 4 potential drawbacks to investing in this fund. So you need to consider all these potential risks as well while choosing to invest in this fund. Now, as we have a basic understanding of this fund, as well as we have analyzed the pros and cons of investing in this fund, now what is the final takeaway from our analysis? Is investing in the Shriram Multi-Sector Rotation Fund worth it or not? As you can see from our analysis that this is a good option for investors who are looking for a dynamic, active management approach with the potential for high returns across various sectors. However, It's high risk and active management cost means it's better suited for aggressive investors who can tolerate market fluctuations. So basically, it depends on you as an investor. What is your risk tolerance and what is the time horizon you choose to invest in? So it boils down to these factors. Our personal opinion is this fund might not be suitable to you even if you're an aggressive investor. If you are a first time investor, especially you're just beginning to invest and you do not know much about the market, then as a first time investor, it's better to step back from a thematic fund like this. And also, if you're a conservative investor, as I have already mentioned, this thematic fund might be more suitable to a aggressive investor. But if you are someone who's not willing to take that much risk, then you should definitely avoid investing in this fund. But if you do still want to invest in a thematic fund like this, then there are existing similar thematic funds out there in the market with a track record. With a track record of at least 7 to 10 years, you would know how it has performed in the good highs and lows, because in 7 to 10 years the market cycle would have also gotten completed, so you can get a clear picture of what is the kind of risk you are taking. But investing in an NFO like this without even a proper track record, and it is yet to build the track record, you are taking a blind risk because you do not know how much risk you are taking, and you are putting the risk in your investment portfolio. So definitely avoid investing in it. And if you do want to invest, it's better to invest in existing similar thematic fund with a track record where you can at least analyze the risk. And also, it's especially not suitable for investors who are looking to add funds to their core investment portfolio. So if you're looking to add funds to your core investment portfolio to achieve specific financial goals, then it's better you choose something else which has a good track record and which you know will perform well. Because as an NFO, and on top of that as a thematic fund, there are a lot of risk involved. So if you choose to invest in it to achieve your specific financial goals, and you're adding this to your investment portfolio, then you're actually increasing the risk in your investment portfolio, because if it underperforms, it can definitely impact the returns in your investment portfolio. So it's better you do not invest in your core investment portfolio. But if you still want to invest in the Shriram multi-sector rotation fund just to see how it will perform in the market, and also if you have some spare money especially, then invest it through your satellite portfolio on an experimental basis with a minimum amount, just on a trial basis, just to see how it will perform. Then over the years, if it is performing well, then you can increase the investment amount accordingly. And another thing is, if you do not know when to enter and exit from a thematic fund, so even for a seasoned investor, it's kind of difficult to navigate investing through a thematic fund, because you do not know when to enter and exit from a thematic fund, especially because if you want to invest in a thematic fund, it's better to invest in the high and exit before it hits the low. So it's better, if you do not know how to enter and exit from a thematic fund like this, to avoid investing in it as well. So if you feel like you have more knowledge, you know how to navigate the market, and you know how to enter and exit from a thematic fund like this, then definitely go for it. But if you do not know, it's better if you take a step back and do not invest in it. So finally, if you do not have the time to research about the market, or you do not know which one will help suit your financial journey, your investment journey, to help reach your financial goals, then it's better if you seek for a professional guidance from a certified financial planner, because consulting with a certified financial planner will first of all help you look at the suitability of the fund you want to invest in. Like if the investment objective of that fund aligns with your investment objective, or does the risk profile of that fund matches with your risk tolerance, or what is the overlap ratio between this fund and your investment portfolio, and what kind of allocation you need to give to this fund to achieve your financial goals. So they look at all kinds of factors from all angles to provide you with a better investment strategy that will help you achieve your financial goals in a more faster and smarter way. So definitely investing through the help of a professional, like a certified financial planner, will definitely help make your investment journey more simplified and hassle free for you. So you can definitely invest with the help of a professional as well. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.